It is activity time. We are going to do the SAKI for the financial year ended 28 Feb 2024. So in other words, we are looking at all income and expenses for the period of 1 March 2023 up until the end of Feb 2024. So 28 Feb 2024. So you may only show in your income and expenses, so in your SAKI, you may only show the income generated in the current financial year and then your expenses that you incurred for the current financial year. And this is now where things such as trading stock deficit, income received in advance, where all of those things now come into play that you learned in term 3. So as I said in my previous video, we start with our pre-adjustment trial balance, and then for the SAKI, we are only going to include the nominal account section. So let's go. First of all, sales. So we're starting with our trading section. Our sales started on 2.4 million. Next up, we have debtors allowances. Remember that debtors allowances is closed off to sales. So you credit your debtors allowances to make it 0. And then you debit, so in other words, minus your sales. Okay, so sales minus debtors allowances will give you your net sales unless you have other adjustments to take into account. Then you also started with some cost of sales. So please always show your calculations here. Just makes it easy when it comes to your part marks. Okay, next up we have rent expense. So that falls under my operating expenses. So operating expenses doesn't have to be in any specific format. So we'll start rent expense. So you're literally just copying from your trial balance to your SAKI all of the nominal accounts. So 55,000. Next, you have fee income. That is an other operating income because it's not sales. So anything other than sales and interest income will go to your other operating income. And that's 120,000. Okay. Next up, we have interest on overdue accounts on the credit side. So that means it is debtors that you charged with interest, and all interest goes to the finance section. You also had some interest on your current bank account, so you're going to add to your interest income. So all of your interest incomes is grouped under interest income here. At a later stage, I will still do the note there. Then interest on loan is an expense, so finance cost. There we go, 28,000. Then we also have salaries and wages under our operating expenses. Sorry. Okay, salaries and wages. Salaries and wages. Starting on 430,000. Then you had some bad debts. That's another expense. So bad debts. Also 1100 amount as per trial balance. Then you have insurance and telephone. So insurance and telephone. Insurance starting on 15,400 and your telephone on 9,200. Okay. Vehicle expenses. So as you can see, I'm writing out all of the account names. I'm not abbreviating. Repairs and maintenance. The and is fine. You can do that. Repairs and maintenance. Sorry, it's because I'm trying to write all faster than it goes all haywire here. So starting on 15,000 and repairs and maintenance starting on 8,200. Okay, so this takes quite a lot of time, but unfortunately you have to do that because these are the expenses that you have to start with before you look at your adjustments. So consumable stores currently on 22,000. Bank charges and sundry expenses. In other words, all other expenses. Sundry expenses. Okay, so what we did previously is in our general journal, we then took all of the year-end adjustments and we said whether the accounts have to debit or credit. What makes Saki easier, like a lot easier, is now you're not going to debit or credit. Okay. I will still refer to the debits and credits just to kind of remind you of what's happening. But you're not going to write it anywhere. You're just going to show it with a plus or minus. So let's just change the color here so we can see what the adjustments are. Okay, so you still have to know the basics of your general journal, but you don't have to say the debit or credit. You just say plus or minus. So it is a bit easier. And then you will also see that not all of these transactions will only be applicable to your statement of comprehensive income. Because if you look at something like the first transaction that we have here, the following accounts have not yet been paid. You should know that this is an accrued expense. It's an expense that I incurred for the current financial year, but I haven't yet made payment. And as I've said in my lessons, that this accrued expense is a current liability that falls under your trade and other payables. And liabilities are not nominal accounts. Therefore, it doesn't go to your Saki. It goes to the SFP. And I'm going to do that one separately. But I am going to continuously refer to those transactions as well, so that it's just a whole lot easier once you get to the SFP, or if maybe in an exam, you get the combined Saki and SFP in a question. Okay. So the following accounts have not yet been paid, meaning that in our books currently, we are not yet showing the telephone for 800 Rand and the water and electricity that's included in sundry expense, the 640. So in other words, we must now go and record that. So what we usually would have done is we would have said we're going to add the expense and then credit bank because we've paid. However, now we haven't yet paid. Therefore, we will credit our accrued expense. Okay, so whatever is not in your books yet, you must now show that in your Saki. So in other words, telephone 800 Rand, I need to say that I have to add the 800 Rand because the 9,200 Rand does not yet include the 800 Rand for telephone. And then the same for water and electricity of 640 Rand, but keeping in mind that this is shown in the sundry account. Okay, so I'm debiting the expenses to add it to the expense, and then I will credit my accrued expenses in the SFP. Then transaction number 2, fee income. Fee income is under operating income. There we have it. It's currently 120,000. They are saying here that fee income of 2,300 Rand is still outstanding for repairs done to computers. So in other words, you rendered a service, but you haven't yet received the payment for this. So therefore, you haven't yet recorded this transaction. Because remember, when it comes to your sales, if you have a sale, but you don't receive immediate payment, it goes to your debtors journal. But this is now not a sale. So it doesn't go to your debtors journal where you have sales, cost of sales. This now goes to accrued income. Accrued income is an asset account, more specifically a current asset. That's balance sheet section. So you're not going to use that account now. However, because you haven't yet recorded this 2,300 Rand, you must now add the 2,300 Rand to the fee income because you have already made the repairs or done the repairs. So you're debiting your accrued income, crediting your fee income, adding on. Right. The rent has only been paid up to the end of Jan 2024. So in other words, you have only included in your financial records the rent up until Jan 2024. Your financial year ended on the 28th of Feb 2024, which means that if you look at your rent expense of 55,000 Rand, that is only for 11 months. But you must show it for 12 months. Okay, so in other words, you need to add that 1 month for the accrued expense that you currently have. So you are going to debit rent expense, add on, and credit your accrued expense current liability, so that part you won't show in your SACCI. So provide for the rent for Feb, taking into account that rent was increased by 10% as from the 1st of Feb 2024. In other words, here you have it for 11 months. So you must first divide this by 11 to find your monthly rent. Then you must increase that by 10%. So you want to know the amount that I started with, 100%, add on to that 10% to get to my increased figure. So 55,000 divided by 11 is 5,000 per month, but then adding that increase of 10%, so 5,500. So 5,500. Let me just write this one here as well. So this was this was 5,000. There we go. Okay, so your rent expense wasn't actually 5,500. You are missing 1 month. So you need to add this. So you're on 60,500. So you're 55 plus Feb. Okay, right. There are certain problems with your debtors. Okay, so debtors, those are current assets, and current assets are seen in our SFP, not our SACCI. However, certain things that affect our debtors will also affect nominal accounts. For instance, bad debts, interest on overdue accounts. So that's it for now for grade 10. Yes, we're going to add on to that in grade 11. Right, so the following entries must still be recorded. First of all, write off additional bad debts of 180 Rand. In other words, you didn't only have 1,100 Rands bad debts, you had that plus another 180 Rand. So debit your bad debts, credit your debtors control, removing it. Then charge certain other debtors on their overdue accounts. So interest income is now increasing because I charged interest on my debtors accounts. If you are confused about that one, please go back to the general journal video where we did interest on overdue debtors account. So you are debiting the debtors control account, saying you now owe me more money. That's SFP. And in the SACCI, you are adding it to your interest income. Right. So transaction number 5 says the motor vehicle went in for a service on the last day of your current financial year, 28th of February. The account of 520 Rand has been paid and the entries have been made. Okay, so debit, motor vehicle expenses, credit, bank. However, due to load shedding, the service was not carried out and the car will be returned in March for the service. So in other words, you said in Feb, I had a motor vehicle expense. Oopsie. Because you then said debit motor vehicle expense 520 Rand, and then credit bank because I've made the payment. They are now saying, no, the repairs were actually not done. So it cannot be an expense for Feb because they didn't work on your vehicle in Feb. Therefore, you cannot include the expense in your vehicle expenses because this has now become a prepaid expense because it's motor vehicle expenses that you paid for your next financial year. So debit your prepaid expense current asset and credit your vehicle expenses. Right. Next up, a new insurance policy worth 1,200 Rand was taken out on the 1st of Feb for 3 months. So your financial year ended 28 Feb 2024. You took out this new insurance policy for Feb, March, and April. So you now need to remove the 2 months that you have prepaid for. That's what the rest of the adjustment also says. We're actually nice here in telling you the amount was paid and the full amount debited to insurance. Make the necessary entry for the 2 months prepaid. So remember, I'm only allowed to show the expenses relevant to my current financial year. Therefore, I have to go to insurance, and I have to say my full expense was actually not 15,400. It was that minus, oh golly gosh, it was that minus, in brackets, 1,200, but only 2 out of the 3 months is for the next financial year. Okay, so I'm removing the 2 months that I have prepaid for. Then the owner took a computer from trading stock for personal use. This has not been recorded. The selling price was this and the markup was that. So we know that whenever the owner takes something, first of all, he takes it at cost. So we would first have to calculate the cost of the goods. That's number one. Number two, whenever the owner takes anything, withdraws anything from the business, it is drawings. Drawings is owner's equity. Owner's equity is a balance sheet section account, not relevant to my SOCI. Okay, then what did he take? He took some of my trading stock for personal use. So that means that I need to remove the stock from my trial balance. However, trading stock is also a balance sheet section account. So why are they giving me this information if I am now doing the SOCI? First of all, sometimes these exercises are for both SOCI and SFP and not only one. We just tend to split them. But second of all, it could be that in the adjustments that follow, they are going to ask you to do the trading stock. Just want to see what's going on here. The trading stock adjustment. Oh no, don't do that. Okay, there we go. The trading stock adjustment. So for trading stock surplus or trading stock deficit. So that's why you cannot just ignore it. So what I usually tell you guys in class is go to your trading stock amount as per your trial balance, what you have currently. Okay, and tell yourself there, so write it there, trial balance amount is currently 245,000. Okay, but now they are saying that the owner took some of the stock for personal use and this has not been recorded. Therefore, the trial balance figure is not the final stock figure because I must still adjust for the drawings. And that is the selling price was 9,000. After applying a profit markup of 50% on cost, I want the cost. I'm working with the selling price. So 9,000, want the cost, working with selling price. So the cost was 6,000. So I no longer have this. So I need to subtract it. So that means I do not have 245,000 in trading stock in my trial balance anymore, because I just did this adjustment where I said debit drawings, credit trading stock. So I have 239. Okay, right. Then the bank statement was received after the trial balance had been drawn up. That means that you haven't yet recorded these transactions up until now. So in other words, you must now record these transactions. Because you only received the bank statement after you prepared your trial balance, it means that you didn't have the necessary source documents to record these transactions before you then did your trial balance. So you just need to record it. So you are going to debit all expense accounts, credit bank because you made payment. If it is an income, you are going to debit bank and you are going to credit the income account. So you had additional bank charges. So bank charges is down here. So you didn't only have 8,000, you had that plus 56,000. Okay. Interest on overdraft, meaning that you owe the bank some money. So you are being penalized for that. So add onto my interest expense. And then a stop order for your insurance. In other words, you had additional insurance of 290 Rand. So add that as well. Okay. At the end of the year, it was determined that 320 Rand of the packing materials included in your sundry expenses was still on hand. In other words, you paid for packaging materials. So you said debit packaging materials or packing materials, credit bank. But now they're saying you haven't used the packing materials. So it cannot be included in your expense. You must remove it from the expense account and take it to your consumable stores on hand in your SFP under your inventories. So remove the 320 from sundry expenses because it was not an expense in my current financial year. And then the consumable stores on hand will be shown in your SFP. A physical stock taking revealed stock, so trading stock, of 235,000 Rand. So your actual stock, so physical stock, was 235,000 Rand. You thought, after doing your adjustments, you thought it should be 239,000. So they are saying that you physically have less than what you thought you had. So you need to adjust your trial balance figure to agree with your physical stock. So you need to decrease it by 4,000 Rand. So in other words, you have a trading stock deficit. You have less than what you thought you had. So trading stock deficit of 4,000. So it's only that movement to get from what I currently have in my trial balance to what it physically is, because I need to show accurate figures, and the accurate figure is what I can account for. The 235,000 Rand for your stock. This is the amount that you will now see in your inventories note in your SFP once you start doing that. So this now falls away completely. Okay. And then you didn't only have that, you also had some consumable stores. So you spent 22,000 Rand on consumable stores during the current financial year, but of that 22,000 Rand, you haven't yet used 1,090 Rand. So you need to remove it from your expense and include it under your inventories consumable stores on hand in your SFP. Right. Interest on the loan is charged at 14% per annum and is capitalized. So what capitalized means is that you add it onto the loan. So you're not going to make a specific payment for your interest. You're going to make like a once-off, including capital and interest. So you're just going to add the interest onto the loan, and that's usually what your car finance will work like one day. Okay, so when you now record your interest on loan, you are going to say debit interest on loan. That's your expense account, and therefore it falls under your finance section. Okay, interest expense. And then you are going to credit loan. That's SFP because it is a liability and it's charged at 14% per annum and then low amounts, which means that you need to go to your trial balance and find your loan amount. Loan, there we go. Loan 14% per annum, and your loan is 220,000. So you now need to calculate what is the interest that I should have recorded in my books. Was it 12? No, it's the other one that's 14. Oh no, it is 14. Oh my gosh. So 30,800. 30,800. This is the interest that you incurred on this loan for your current financial year. But if you look in your trial balance, your pre-adjustment trial balance, you have only, up until the last day of the current financial year, you've only recorded 28,000 thereof. So you need to now adjust for the difference. So your 2,800, you now have to add on to this interest on loan for it to add up to 30,800. So plus 2,800. And then you will credit your loan account. Okay. Where are we now? We've done a lot. Right then. Depreciation on vehicles of 55,000 Rand and on computer equipment of 6,300 Rand must be written off. So in other words, you now have an additional expense because remember, depreciation is a year-end adjustment. So you will always have to do that. So depreciation, they were nice here. They gave us the amounts, but it will still get to the point where you have to calculate it yourself. Okay. Remember that your depreciation expense includes both vehicles and equipment. So we aren't going to show them separately here. It's shown separately in your SFP. So you debit the expense account, depreciation, and then you credit accumulated depreciation on vehicles and accumulated depreciation on equipment. Okay. Right, was that? Oh, not it. Almost it. You are told that during the year, the owner withdrew 20,000 Rand capital from the business. This has been entered and is reflected in the figures in the trial balance. That is relevant to your SFP because in the SFP, you are going to then show the movement in your owner's equity from the first day of your current financial year up until year end. 25,000 Rand will be paid off the loan on the 1st of June 2024. So the reason for that is if you are doing an SFP, which we are not, but if you do your SFP, you have to keep in mind that any loan that or amount that is repayable within the 12 months following your financial year is no longer seen as a non-current liability. It is seen as a current liability. So then you just have to move it or reallocate, as we call it, the 25,000 from your non-current to your current. But we will look at that once we do SFP. And then the fixed deposit matures within 2 years' time. So same thing with your fixed deposit. If it were to mature within the next 12 months, then it will no longer be fixed. It will form part of your cash and cash equivalents. Okay, so the only thing that we now still need to do is something that they didn't tell us in the adjustments, but you have to know that your fixed deposit was 80,000 Rand and you earned interest of 14%, of 8% on that fixed deposit. So 80,000 times 8 8%. So you should have received 6,400 in interest on your fixed deposit, and you do not have any accounts for interest on fixed deposit. So you just need to go to your interest income and show that 6,400. So be careful of that one. We sometimes do it with the interest expense, where you just have to double check if you've included all of that. Okay, so you know how to add and subtract. I'm not going to do that now. Just keep in mind that your cost of sales must be shown in brackets, please. Otherwise, for one, I'm very strict on this one, so I won't give you your marks. And then this is 2.3 million. Okay, so you can do the rest of that. Add to that your other operating income, and then add all of your operating expenses. Remember that the total must go in brackets. So then it is your gross profit plus your other operating income minus your operating expenses to get to your operating profit. Add to that your interest income minus your interest expense to get to your net profit for the year. And that is Saki with adjustments.